Coming up today, stocks rally across the board. Wall Street's profits surge higher. Ethereum rallies on the back of big news. Peter Thiel buys a stake in Tom Lee's company. Will Trump fire Jay Powell? Wholesale inflation comes in lower than expected. Coke to use real sugar. And why retail traders aren't going anywhere anytime soon. It's another great day, guys. Let's go. Well, it's a bit of a bullish day there, looking across most sectors. But what we're looking at here is pretty much all just large and mega cap stocks. The true standout today was small caps. After coming off quite sharply yesterday, down almost 2%, they led the indices higher again today. But stick with me today because later on in this video, I'll show you what's really moving out there. Looking underneath the hood at small cap growth stocks, with many printing double-digit gains today. Quantum computing, drone stocks, and especially crypto. We've got some big news happening in this space, and I'll show you all the hottest stocks later on. And if you enjoy this type of content, then go ahead and smash that like button and make sure you subscribe to this channel. Click capital as I bring you these videos every day after close, along with sharing with you positions I'm actually taking in the market, just like I did a few days ago with Bit Digital, up 20% today. And this is something you won't find many other FinTubers doing out there because in my opinion, most of them don't even trade. But I'm just like you, an active trader, and us retail traders now make up a larger share of average daily trading volume than hedge funds. In fact, we're almost twice the size of them now. A real force in markets who have actually been picking stocks better than Wall Street these last couple of years. And here's a look at some favorites today in Yahoo Finance's trending stocks list. We're just getting some massive moves out there, and some of these small stocks, few of which had been beaten down, are coming back in a big way. Open Door Technology, up over 43% today, huge volume, 288 million shares traded, and they're a property tech company with a platform for buying and selling residential homes. As an addition to retail traders, we're also getting some activist investors coming into this stock trying to turn it around. And some of the best performing stocks today, Ethereum treasury companies like SBET. As the underlying currency, ETH just broke out above 3,400 a coin for the first time in a while, along with its relative value to Bitcoin, once again smashing up there today. But more on that a bit later. Just getting back to the market and starting from the top down first, S&P 500 did have a bit of a dip there in the morning session, along with bonds coming off as rumor was floating around. Trump was about to fire Powell, which he had to come out and say that's unlikely at this stage, as it may have been another classic Trump move of throwing something out there and then gauging the reaction without setting it in stone. So the market seemed somewhat relieved and the dip was bought. And once again, here we are hovering just below all-time highs, still coiling up on low volatility. But we do have a little bit of bearish seasonality over the next 2 to 4 weeks, especially in the NASDAQ Qs, even more so. And that coincides with bullish seasonality for volatility in the VIX index. This is typically a time when volatility can rise in the market in addition to a pullback in tech stocks. As typically we see the best gains for July in the first half of the month, like we have done then. As we get into the second half, starting tomorrow, the market could consolidate and pull back, seasonally speaking, which, just keep in mind, is just one of many driving factors of the market. We also have, as usual, many other driving factors: earnings, sentiment, the momentum, key events as we approach the 1st of August. I'll talk a little bit about that later on with the latest on tariffs and inflation data as well. I'll touch on, along with my thoughts on that. But first, what's really led this rally from these April lows is none other than Nvidia AI, helping to send the indices to all-time highs. And just a few stats here to visualize what an absolute monster Nvidia has become, as it just recently passed 4 trillion in market cap, first company to ever do so. It's now bigger than Meta and Alphabet combined. It's bigger than Costco, Walmart, and Amazon combined. And these traditional large cap companies, just a fraction. I remember when I first got into trading 20 years ago, these were the big dominant companies: Coca-Cola, McDonald's, Disney, General Motors, Ford. And these tech companies, a couple of which weren't even around then, were just a fraction of these guys. How things change over time. Even more mind-blowing is Nvidia's overtaken the valuation of Europe's largest economy, Germany, and their entire market cap. And this data is a month old. Nvidia is now 4 trillion market cap up here, and very well could be on its way to being double the size of the entire Germany stock market. But I'd say the most mind-blowing stat is not only is Nvidia larger than the entire consumer staples sector in America, it's now larger than the entire utilities, REITs, and materials sectors combined. What an absolute behemoth Nvidia has become. And that's because just about every company and sector now needs Nvidia for high-end AI GPU chip. AI is touching every single sector, and Nvidia is pretty much the Google of GPUs. And mega cap tech, in my opinion, it's gone from dominating into a new stratosphere. Even if they weren't hyperscaling into artificial intelligence, just their traditional businesses are enough to stand head and shoulders over everything else, but they're putting that ocean of cash flow into scaling as hard as they can into AI, taking it to a whole new level and global dominance. And again, that has big halo effects. It's good for Wall Street and deal making and new IPOs, mergers and acquisitions. We've just seen the biggest investment banks, Goldman Sachs, Morgan Stanley, beat on earnings, trading revenue surging higher, along with their wealth management units, with stocks at all-time highs. Property still overall holding up, hasn't come off that much, even though activity slowed down somewhat. And of course, many consumers are still struggling with high rates and structurally embedded inflation, but Wall Street's kind of separated itself from much of the real economy as corporate profits and wealthy consumers continue to hold up the market and overall consumer spending. And we just heard that once again today from Bank of America. Just like other finance CEOs yesterday, they said the consumer's holding up, along with their business customers as well, and overall US economic activity, even though, just as it has done for several years now, their outlook remains somewhat pessimistic. I think so many of us investors have psychological scars from the global financial crisis, the pandemic, inflation, and then continuing to see stocks go up that whole time. Many have fallen to gambler's fallacy that there's just still a wide-held expectation we're on the verge of a crash. Even though, in my opinion, I think we're melting upwards. There's more risk on the upside and missing out than there is on a 20 or 30% correction in the market. And if all this growth does hold up and we can get lower rates, in addition to these secular trends, huge retail buying, that's just the recipe for this market to truly go into a bubble. And we may see S&P 500 at 10,000 before it's all said and done. And wouldn't that be a great psychological level to top out at in this now almost 2-decade secular bull market, for which in that time has spawned an entire new asset class, cryptocurrency. Bitcoin first created in 2009, the same year the secular bull market started after the GFC crash bottomed. It is now being legitimized in a big way thanks to a change in the US government and their approach to crypto, convincing their political peers to also jump on board and make the United States the clear crypto leader. Right now, Congress is voting on key stablecoin legislation, which it looks like a lock that it should be passed. Prediction markets penciling it in at 96% chance. And this does matter because it's changing the face of finance and the digital infrastructure that a lot of it is going to run on, which should very well open the floodgates for new crypto use cases, corporate adoption, and institutional investment, a trend that's been significantly building over the last 6-9 months with crypto ETFs coming onto the scene. But the watershed moment is the Genius Act, the regulation of stablecoins, which basically turns the US dollar into a digital currency that runs on top of the Ethereum platform and are backed one-for-one with US treasuries, once again helping America to retain its US dollar currency reserve status, a huge and probably the most important advantage the United States holds in addition to their dominant military. And even though many don't like it, including the biggest bank, JP Morgan, and its CEO, they have no choice but to jump on board with this. And we just heard America's second largest bank, Bank of America CEO, they're working on launching a stablecoin, and investors can expect the lender to move forward with it as they expect these new regulations to be signed into law. And so as always, they've got to adapt or they'll be left behind, but they're still all trying to get their heads around this, as the establishment are still largely Generation X and the boomers coming from traditional finance. This crypto stuff is all new to them. Who it's not new to is one of the best investors in the world, tech billionaire Peter Thiel, who just took a 9% stake in one of these new Ethereum treasury companies that's actually got Tom Lee as the chairman. And this is a big green light from one of the best investors in the world, getting on board in a big way on an Ethereum-backed company, which has gathered a lot of interest just in these last 2 weeks. And Tom Lee himself just bought the dip on that company, Bitmine Emergent Technologies, picking up $2 million worth of shares, alongside with Peter Thiel, as we've seen massive volatility in this ticker, with a trading range of $12 to $161 just in the last 3 weeks, who's also been getting in on Ethereum, the US president, and his family company World Liberty Financial, picking up $5 million worth of ETH, as it now appears to have a fire lit underneath it. I made a strong case to you guys 2 weeks ago when it was at $2,500 a coin, why I thought Ethereum was on the cusp of a breakout because of fundamental key drivers that I track here every day on the channel. Something you wouldn't have been able to tell just looking at the daily candlestick chart like many others do, just analyzing the daily noise, which is almost completely useless if you ignore the fundamentals. And now my momentum thrust indicator just fired off an up signal, bodes well for forward returns, looking at the previous times we've got it as well. And it was good to see my favorite stock in the space, Bit Digital, who are the third largest Ethereum treasury company and very well could become number 2 soon, and even have a shot at overtaking SharpLink Gaming, who are number 1. Bit Digital, they have a wholly owned subsidiary, White Fiber, an AI infrastructure stock that they plan to spin off an IPO, which should be a cash windfall for shareholders. Stock is up 20% today, in addition to the company selling all their Bitcoin the last couple of weeks and going all in on Ethereum. And I believe this could be still just the beginning. Just looking at Ethereum's market cap dominance of the whole entire crypto market, still just bouncing off multi-year lows. A few months ago, we got down to 7%. Here we are, 10.8%, and its relative value to Bitcoin still just coming off these lows that I think are highly unlikely to get tested again, maybe ever, as the financial world quickly adopts stablecoins, which Ethereum is the clear winner of. And so not only on the monthly chart here does it look like we've put in a bottom, the weekly chart also looking very constructive. We've done a bull flag, look to have resolved that on the upside, and the daily chart as well. After we just reclaimed the 200-day moving average for the first time in over a year, once again we got another up signal from my momentum thrust indicator, letting us know the market's pushing this up with a strong volume push, which you'll often see at the start of big trends. And anybody interested in getting all my technical indicators that you see me use every day in these videos, click the link below this video and head on over to my site, clickcapital.io, and check out my list of 28 custom indicators I've developed, because they're exactly what I use every day and helped me to form my opinion a couple of weeks ago that Ethereum was primed for a breakout, as we had bullish seasonality back then that has played out even quicker than what I thought. We also saw the provider of the USD coin, Circle, put in a strong rally there today, up 19%. As I've been noting the last couple of weeks, it's been defending the volume weighted average price ever since coming onto the market. Just looking at my VWAP indicator here, showing institutions have been buying the dip and they key off that VWAP price more than anything else. Moving on to one of the biggest headlines today, and a reoccurring theme in markets, is whether Trump's going to fire Jay Powell, the chairman of the Federal Reserve, who he's greatly displeased with for not lowering rates, as Jay Powell's stance has been to wait and see if tariffs are going to increase inflation before moving on interest rate. And so like I said, I think Trump threw it out there via his team to gauge a market and political reaction for the possibility of pulling the trigger on this. And that did shake up markets quite a bit here in the morning session. We saw yields shoot up, the dollar come off, even gold caught a bid, even though it wasn't made official. Markets and the algos started pricing that in. However, he came out in the afternoon and quelled those fears, along with the VIX index, after he said he isn't planning to fire Powell, which for now markets seem to be buying it. We saw that in the price action in prediction markets today, getting up to a 39% chance Jay Powell will be out as Fed chair this year. But after we heard from the president, they came off quite sharply, but still hovering around where they've been for a few weeks now. So it's still on the table. But as much as the president would love to do that, it's much easier said than done and would be a huge precedent. And unless there's real technical legal evidence that would match the four cause requirement for firing, or unless Congress were able to elect to impeach him, such a firing would be technically illegal and unlikely to hold up in court. I think he's just piling on the pressure to get Jay Powell to resign, which Jay Powell might. That wouldn't surprise me, because I got a feeling Jay Powell may rather resign than do what Trump wants and cut rates, because if and when Powell does do that, Trump will say, look, I was right, it just took you too long. And so it's gotten quite personal, quite political, and this could play out a number of ways. And so it might be a bit surprising to see Jay Powell make it through to the end of his official term in May next year. And these 22% odds may be good value. Because like I said, if we don't get a huge and material increase in inflation data in the next couple of months, and Jay doesn't cut in September, I think the heat's going to be dialed up even more. And even though we saw CPI tick up a little bit yesterday, as expected, wholesale inflation, the producer price index, PPI, which is the biggest input into CPI, consumer price inflation, where it usually starts, was actually flat in the month. And every single economist, for which there were 50 surveyed by Bloomberg, got it wrong. None of them thought it was going to come in flat. They thought it was going to increase 0.3%, but it didn't. And once again, one could argue that inflation at best is consolidating, if not still in a structural downtrend. And cutting rates by 25-50 basis points shouldn't have a huge material impact on inflation, but it would on millions of consumers and small businesses, in addition to putting a tailwind behind risk-on capital markets. So right now, interest rate traders are still saying it's only about a bit better than 50% odds we get a cut in September. We're all kind of waiting and seeing how much of an uptick is tariffs going to give us, because right now we haven't really seen it. And Trueflation, which gives us a real-time look at how prices are growing in the economy, still think we're around 1.7% annualized, well below where the Fed's at 4.3. So that's one big theme in the market and will be for a few more months. The next is the 1st of August deadline for countries to get deals done with the states. with the admin sending out letters to 150 countries on what their tariff levels are going to be. But it's really the big key trading partners the market will care about, the European Union. With their trade chief en route to Washington as we speak, potentially see if they can pencil in an official trade deal before their 30% tariffs go into effect in less than 2 weeks. I think the market would cheer that on and maybe even trying to front run that. Otherwise, they're thinking the admin may extend the deadline again. But what's different now to early April is markets are not getting created. In other words, Trump's got plenty of chips to play with here, and this is likely giving him and his team more confidence to impose their will on key trading partners. And so it's a bit of a paradox with stocks hovering just below all-time highs. So we very well may not get an extension on the 1st of August, but will that even upset the market? Will the market just think, well, it's going to get done next month? Because a 30% tariff on European imports would be material for consumer prices and inflation. But let's just see what the European leaders decide to do. They have an opportunity to get ahead of that because it'll be more damaging for them than the Americans as they're net exporters to the US economy. And in addition to 150 countries, who else got served the notice today? Coca-Cola, with Trump apparently convincing them to use real cane sugar instead of the synthetic crap that they've been using. Definitely a step in the right direction in my opinion, and we actually get to hear from Coke in 5 days, which is kind of a forgotten about blue chip stock. But up on deck tomorrow, PepsiCo, which has actually been under a lot of pressure as there's been a secular trend away from these sugary snacks. Big change in political policy with RFK coming after them as well, but this stock is starting to attract the attention of value investors. With a dividend yield above 4%, it could be ripe for an activist to get in there and potentially orchestrate a turnaround. And they're not alone. Plenty other consumer staples companies have been somewhat weak this year. Procter & Gamble, Kraft Heinz, which has just perked up on news of a potential breakup, and Campbell's Company, also looking like it could be getting some potential accumulation from value investors here, given it too has a dividend yield above 5%, but just hard to get excited by a soup company these days when AI is all the rage. What's also been all the rage lately is these high-yielding ETFs, which is pretty much a new asset class, becoming very popular with retail investors as well. The two biggest providers, YieldMax and Roundhill, actually introducing more weekly pay ETFs. And they give you exposure to some of the most popular stocks, whilst also engaging in option overriding strategies to generate regular income. Interesting to note, their Nvidia weekly pay ETF has actually generated a greater total return than Nvidia itself, and a lot better than YieldMax monthly pay ETF, NVDY. And there's a look at the Roundhill Nvidia weekly pay ETF. Look at this volume the last couple of weeks. Really picked up. And same with YieldMax's signature one, the Ultra Option Income Strategy, which holds positions in multiple stocks, kind of like a high yield fund. 133% annual dividend yield. And they've switched their strategy up somewhat after it got absolutely created last year, being too heavily dependent on GameStop. They've diversified more this year. ETF's been going sideways for a few months and just broke out today again on massive volume, 44 million units traded. And it's not hard to see why. The appeal of weekly dividends coming into your account, allowing for that cash flow to be reinvested back into the fund or somewhere else. Also catching investors' eye today, robotic stocks. Serve Robotics, bouncing back off support. Don't sleep on uranium, like quantum computing just keeps on running, along with the new age nuclear stocks, Oklo and SMR, actually taking out multi-month highs today. Bit mixed in battery stocks, but keep an eye on EOS, Energy Enterprises. I think this has the potential to be a retail favorite, along with the potential buy the dip opportunity, and the one I've got a long position in, Microvast. One of my favorite ETFs that I own, the Entrepreneur Shares, private public crossover, their largest position in SpaceX, consolidating just below highs. Rocket Lab, continuing to rip higher. You could think of this like a little mini SpaceX, with a market cap about 5% of SpaceX's valuation. Another one I've got, Planet Labs, also consolidating on the back of a great quarter a month ago. Quantum computing really perking up here today. This sector just won't give up. Also looking like a buy the dip opportunity, Oscar Health, maybe finding support here around $15 a share. This is another retail favorite. Fast growing new age healthcare company, still a decent valuation as well. And another one in my long-term portfolio, Grail, also giving us a reversal signal indicator here today, potentially finding support around 37 a share. New highs once again for Palantir, and don't forget about eVTOL and drone stocks. Joby Aviation, strong rip there today, along with Red Cat once again. Gave this to you guys on Friday, so keep an eye on it. Has strong potential to become a retail favorite, and we just got another momentum thrust signal firing off, showing the stock squeezing higher. And don't forget about hot fintechs either. Robinhood still marching higher, and of course rare earths, which have been a big one this week on the back of Apple buying $500 million worth of rare earth magnets from MP Materials. But once again, I think it's Ethereum stealing the spotlight as the financial world comes around to stablecoins on the back of watershed legislation set to go through Congress, helping us to once again see the largest volume trading day for the iShares Ethereum Trust, gathering a lot of assets under management this last week and helping me and my options trading members have a very profitable day. I closed a bunch of crypto options trades today, including in this ETF along with Galaxy Digital, and we also had a good winner in Rigetti Computing, booking over $1,500 in profits today. Again, if you're interested in learning more about my options trading service, then click the link below this video and check out my website, clickcapital.io. Otherwise, that's a wrap today for the Daily Market Review. Thanks for tuning in, and let's see what tomorrow brings us. Cheers.